Welcome to TradeTheMBA.com. This is John. This report is for the 8th of October, and well, red candles pretty much tell the story. We started here with our classic short snake. I mean, just beautiful. And the other day when we had the selling, we moved all the way back up above the green ABM, caught below the yellow. And you know me, as far as I'm concerned, when you're below the yellow ABM, that's tends to be more short, and certainly below the green is definitely, though you can fight your way back up. And in this case, we can see that each of the days has brought some buying. Now we've moved all the way to the 50%, which obviously is a key for institutional guys, and that's exactly what they look for. From a setup standpoint, however, you don't have a reset of anything yet to indicate that that has ended. So that's worth noting. The NQ much worse. It dipped all the way to the 23% before rebounding, still below its 50%. You can see the beautiful breakdown. So it was just beautiful, clean read from our DOC readings from back up at the peak. It was holding on, but it takes some time for the sellers to get enough of it going to exit their lungs and move the other way, and then boom, they let it happen. And of course, the euro being below where it was didn't help. It's still right at the top side, though, of the upper band. So it's still, from a healthy standpoint, it's not the end of the world. That's why the market's not collapsing either. And lo and behold, after all this time, my God, how long was I talking about this 113 target? Let me shrink this chart. It was quite a while because we had gotten to it and then bounced back. And like I was saying, it was an unrealistic expectation given where the economy was going, rates were going, that there was going to be a lot of pain in the bond market. Now they're talking about almost $1 trillion lost in the rout. I mean, this was just insane, ridiculous. When we got up into these 128 numbers, and I was just telling everybody, look out. And some people may have heard, doubtful. Oil still being in this elevated area obviously has been the trade of a commodity that's liquid enough to be traded in all currencies, though it is predominantly based in the dollar, but still it gave an opportunity as opposed to having to play with gold, Bitcoin or the others. Those kind of faded off. Though you should start to see some attention to gold once there's a definite realization that treasuries and or currencies can't be used. And if the feeling is that equities are going to suffer because of rising rates, then gold will be the alternative at that particular point. It hasn't happened yet. We can see it building. It just hasn't taken place yet. So let's look at it from the 5K standpoint. We start back all the way over here at the beginning of the day. We were peaking out with all sorts of positive extremes. And so we had some positive extreme retrace numbers, the 29. And then these were older ones from before, going all the way back down. I'm just going to go ahead and increase, because what happened was we could clearly see we ended up with the same DOC short spread snakes that popped in right at the peaks with the red dots and then retraced. It fought back up again within that. I always look for it this way. When I see my red, well, if you're above zero, moving below it is critical from a peak move, but particularly when you're below 7 point, just around 7 even on the DOC. If red moves below that, it tends to be more bearish than bullish. So when it's back above it, you look for that break of the zero, which happened right over here. And then it started, and then boom, every time it attempted to move back to that negative 7.5 was rejected. Clearly too with the positive extreme, letting you know. And then that began the cascade, and we clearly stayed under it even when we got to little bounce back modes. They were already yellow dot every time there was a peak, and sure enough that just led to new lows until we finally started to elevate here. The gold had already made new lows and then started building with shakeout well above the negative 13.5. That's that little short tooth green line right here, and started building that. You can see the P3 developed within there, and that nice little L that's right here. Slide it across, maybe right there, so you can see it. And that's what shows up for a long setup for used to be a yellow candle construct, and we took off from there. And you can see right above the 7 right here with the gold was above the 23, and right above that old algo number 2880, and stayed above it the whole way through until we ended up breaking that zero. That led to the decline, but not deep enough to where it got far enough below the 7.5, popped right back above it for the red, and that's where we ended. Pretty even with that, and so something to pay attention to in the future when we're following intraday action. Increase the chart here so you can get a much closer view of how that looks. But all in all, quite good action. Left plenty. Of course, for me, it was interesting Friday because the internet providers here in Florence decided that it would be a neat thing to just transition from their regular service to the new fiber optic that had been put through the city a couple years ago, hadn't been activated, and without warning, just decided to activate them. And then realized when everyone was complaining that they would send out a text message letting everybody know that, oh yeah, by the way, we just decided to flip this over and you won't have any internet for a couple of days. And so fortunately, I have more than one internet provider here, and they had an alternative source and was able to get back up to be able to follow things. But needless to say, probably not the smartest business move, but I don't think they really care. Government controlled and all, but certainly has moved to the new fast speeds, so that's a positive from that standpoint. But quite interesting to have that happen, particularly when I was short the position from before anyway, and I still have a remainder short position on that. Yeah, it was right around the 24.11 range from the previous spike. I was unable to see when we dipped down to the lows, otherwise I just, fortunately, it had some trailing stops in with a couple of these key points, so I was able to capture pretty decent out of it, even not being at the screen, so to speak. So all in all, I think it's just been exciting stuff, and it's very clean to see it. And of course, even when we got to here with the cyan under red and just moving it to the highs, it was all in all just perfect stuff. So very excited about what that's doing and how well it's reading. So hopefully you're enjoying that as well, because it's pretty fantastic. As always, though, I will keep putting up charts as relevant and be active in pointing out these scenarios. You can see that we ended up with that P3 right here later, right before the close. So we'll see if that has continuation, just like the P3 here did, that led to the highs. But we got all those extremes. It does leave that extreme right here, about the 50% line. So we're in that 28.84 range, I believe is what it is. Let's see if we can get the actual low. 82.50. So right at that 50% is a full positive extreme that wasn't filled. The previous ones all the way through here were filled on this comeback, and it was pretty close to the 80%. But just something worth having as a marker so that you know it exists. As always, though, trade well. We'll talk to you later.